Welcome back to the Sunday setup. So every Sunday I map out NQ for the week ahead, where price is being drawn to, the levels that actually matter, and the scenarios that I'm watching for before Monday's open. This isn't a prediction, it's a framework, and I'll show you exactly what I'm expecting, what invalidates it, and how I'm going to be trading it if it plays out. So let's get into the charts. So starting on the weekly time frame, I can see that we're heavily diverged off this high, whereby ES has well and truly swept all-time highs and NQ is clearly failing to. So from that, that's a very bearish sign. The fact that we then got a displacement candle over this prior candle, being an ICT bearish order block, that is also very bearish, right? So the first thing I'm going to be looking for to where are we likely to trade to within this swing right here. So first things first is you can draw up our highest time frame, premium, and discount, right? From there, look at what is inside that. So we have this large weekly suspension block here. Suspension block because it has a volume imbalance on both sides, right? From that, that's more so our draw, right? I'm going to be looking for CE. We're going to see how we're going to react off quadrants or octaves of this PD array. So if I zoom down even further onto the daily, right, I will keep our premium and discount here. We can understand that that weekly suspension block is through this range. You can also then be more precise by saying, okay, if the weekly suspension block is here, where are our daily lower time frame draws that are going to improve our precision within this range, right? So that's going to be these daily inefficiencies through here. So when we look, no volume imbalance, no volume imbalance. This is our first daily inefficiency. So we want to see if we're going to trade through here. The other levels that I'd be looking at. So right, I'm just looking over to the left and I'm scanning what prominent PD arrays I can see. I can see we have a daily change in state of delivery. So you can see how we're reacting off these specific levels. This whole thing right here is a breaker swing. So if we have up closes here, down closes over, when we then inverse that, so that was a bearish order block. When we inverse that, that is now a breaker swing, right? What lies around that breaker swing? We have another suspension block over here. So these are the sorts of things that I'm paying attention to over to the left side as we trade towards discount to see whether we do actually want to visit discount. As we are on a higher time frame, discount is not always revisited. As you can see within this swing, discount was not revisited. Let me just get it up. Right, so discount was never hit. That is also potential for a rebalance of this low, which we might end up seeing depending on how we trade through here. Obviously, because we had opposing, right, we have weekly SMTs off this high, and then we have further divergence off this high. You can see how we had 3 separate daily SMTs of this high with NQ having a 3 drive, ES failing to because it doesn't need to draw that liquidity as we've already drawn all this liquidity over to the left. So then we've had this inversion over here. This is what is actually driving us back down into this range, right? So we've had this inversion, that is a bearish sign alongside a change in state of delivery over here. From that, I can go, okay, let's do standard deviation projections of this. So standard devs, where does 2 to 2.5 for standard deviation, those sorts of things. That's going to give me some form of target, right? So 2 to 2.5 might be a bit low, but on a high time frame, it might only go to 1 standard deviation, for example. Right? Alongside that inversion, what else did we create? We created a SIBI. So this SIBI is now a daily unmitigated gap, right? So if we are to diverge inside here, if we're going to draw more liquidity for us to then go lower, this is where we're going to draw it from, this unmitigated gap right here that will likely be revisited, whether it is later or we come back up on like a Monday, Tuesday high week, right? Because this sort of displacement implies to me that the next week will likely be bearish. Right, we're going to at least accumulate or generate some form of liquidity in here for us to then be able to go higher if we are to do that, right? What invalidates that would be inversion of these levels right here. So if we were to close pretty much below this inefficiency here, that would invalidate that, and I would definitely see that to be the draw. But you do not need to be identifying what the next 2 weeks is going to do, right? It's not going to serve you of any benefit. What I instead would like to know is what is today going to do? What is tomorrow going to potentially do? Maybe the weekly profile at max, right? So if I was to base a weekly profile here, we have low resistance liquidity up into this gap, right? That is going to be our likely Monday, maybe accumulate or trade higher. Tuesday, put in Tuesday high of week, and then we have Wednesday, Thursday, Friday with, I think we have the Jackson Hole Symposium, whereby, so it could be very interesting week, to be honest. It could be a bit of accumulation. It will likely be a week I'm going to de-risk a bit. So moving on, right? If I'm looking for these sorts of levels, you're just drawing over to the left as we go towards each one. I want to see how we react in it. And then whether I keep it on my chart or not depends on how we treat it, right? Alongside our lower time frame narrative. So the only things I'm going to keep is this daily unmitigated SIBI and 0.5 from here. So now moving on to the 4-hourly time frame, you can see that we may have fulfilled some form of market maker buy model here, with this being the sell side of the curve and then the buy side of the curve. You can also see how we are undoing the left side. We have re-entered a stage of accumulation. We reaccumulated through there. We then swept out all that liquidity. This looks like quite a clean sequence for us to then look to rebalance here. So you can see how through this run, we had little to no retracement. That is a sign that 0.5 is likely to be revisited. That also aligns with this breaker swing right here, these new day opening gap inefficiencies, right? This was actually a new week opening gap here, more new week opening gaps, right, that are largely unmitigated still. We would like to lay bodies over these gaps. We don't want to leave it with just wicks through. It's going to want to lay a body over. So then from that, the 4-hourly is going to give me a bit more of lower time frame structure. However, with what we have done over the last few candles, it doesn't give you all that much. All I can really see here is a 4-hourly SMT, and obviously the fact that we have traded into this bearish order block right here, right? But we have no real inefficiencies through here. No inefficiencies to me more so means it is high resistance liquidity, and we may continue to reaccumulate, obviously, because we are filling these large inefficiencies that were completely unmitigated, right? Or at least mostly unmitigated. So now on the hourly, you can see that divergence a little more clearly, right? Whereby we ran these two highs here inside of this hourly inefficiency. We failed to on ES, we treated it as a rejection block, right? And then we've rolled over. This is a very clear form of original consolidation, or accumulate, manipulate, distribute, whereby we've had our smart money reversal off the high, prominent SMT, low resistance liquidity on both. That is a very good sign. You want to be seeing low resistance liquidity on both. If we are to get this hourly inversion, we will almost guaranteed see these lows, right? So if we are to close with an hourly candle closure over that, very probable that we will see those lows. So now on the 15-minute time frame, the main inefficiencies and things that I'm looking for is first, from this swing, right, we have traded back to optimal trade entry. If I'm considering this to be a protected high, I'm looking at optimal trade entry. Look at our highest premium array, right? Our most premium array within this range is this. You can see how this gap almost just rests below discount, right? And we have this unmitigated gap up here. It makes sense for us to trade back to this unmitigated gap. What does this jab do? That puts in higher time frame SMTs. So this was putting in hourly SMTs over to the left, which is further confirming your bias, right? In this sense, this is some form of low risk to you while it is rating ES. So you can get a very nice fill inside of this unmitigated gap as soon as you see displacement away from on a lower time frame. So from that, you can also see we've had this 15-minute inversion here. Even though it wasn't very clean, we have low resistance liquidity at least back into this 15-minute unmitigated, which would act as a clear break even if you were to just like enter right away. Do not do that. But like that would act as a break even if you were trading that scenario. So then on the 5-minute time frame, right, even more low resistance liquidity. You can see how generated this is. We're creating failure swings. It's legit, like you can see the way that it's printing. It's almost botted, right? It's creating these trash failure swings. We're not rating any liquidity. It's sort of just like chopping around, generating liquidity, right? Not the sort of runs that you want to be on side with, but the sort of runs that you want to be rating, right? So low resistance liquidity lows. And then even further, if I zoom down to the 1 minute time frame, I can see, okay, look over to the left. What is this? This is a massive data wick. You can see that we were respecting inside of the data wick. Let me get rid of all this stuff. Very cleanly off 0.5 of this data wick. These are the sorts of things that I'm looking at, right? So that low risk inside there was a data wick, which means that is a both draw, right? So we're not going to just want to fully leave this. This is some form of inefficiency. It can be used as a PD rate, it's a gap, right? Same as gap theory. You can see we respect the lower quadrant here. We're respecting the low. We finally jab up, rating all this low resistance in here whilst still respecting the protected high because it is a rejection block. It has rejected out of that 15-minute gap, out of these 1 minute gaps after running this low resistance here. So that is a high resistance high. A lot of this is forming if and then statements using low versus high resistance liquidity, always targeting low resistance liquidity and having a high resistance stop. Once you can do that, it's game changing, right? More low resistance liquidity through here. You can see we start to spool through that low resistance liquidity. We're spooling through it. That is how I'm getting on side with those very quick runs, right? Because I'm understanding you use time-based models. Look, we roll over into the macro. It's 1550. I don't care what session we're in, right? It's a macro. So macros will always roll us to some form of inefficiency or liquidity. Often that is spooling through low resistance liquidity. Final thing to note is that I've seen people that don't think that you can identify market maker models before this happens. You guys can watch this through the week then. You see this accumulation range right here inside this gap. This is an original consolidation, right? We leave the range, we offer low risk. We have our first stage. What is all this? First stage reaccumulation. This and through here will be our second stage, right? Then we should have some form of flip either after sweeping this LRL or even not even, right? We could only make a slight jab into these inefficiencies over here, into those high time frame inefficiencies I was talking about, those levels that you want to be keeping up. And then we would have some form of rollover and we will start to undo the left side of this curve once the second stage has been had, right? We've had our retracement. And then we will need to draw more liquidity topside because this is low resistance liquidity up into this daily unfilled, right? This is our primary draw in that case. That is how I'm able to hold for these longer runs. Why is that our original consolidation? Okay, you can see that it was low resistance liquidity on both. There is no prominent SMT here. Yes, this high had an SMT, but it left low resistance for later. So it was a short-term / intermediate term high. Whereas I'm looking to be going from long-term lows, right? And raiding all these short-term / intermediate term highs. That is how you can hold runners. The other reason it is an original consolidation, completely LRL based. Again, you can see these relative equal highs. It is all low resistance liquidity. This is generating more low resistance liquidity. All we need is essentially a manipulation off of all this accumulation, and then we can have our distribution back up into this gap at least. So that's the week ahead. It's a framework, not a prediction. So if the narrative changes, I am willing to change with the narrative. Using if and then statements, I can frame both sides. So you can always be able to be on side. See you in the next one.